Ever notice how broke people always flex the wrong stuff? Brand new Jordans, the latest iPhone, rims shinier than their actual future. Meanwhile, the quiet millionaires, the ones you never notice, are out here stacking assets so boring they'd never go viral on TikTok. But see, that's exactly why they're rich. And my goal for today is to completely break down the 10 assets that actually build wealth, ranked from powerful to meh, but still useful. Because here's the truth, most people think wealth is built with stuff, but the rich, they rank assets differently. Stick with me, because if you miss even just one of these, you'll be like that guy bragging about his crypto gains right before he moved back in with his mom. So let's start with the most slept on, yet ridiculously powerful asset. Asset number 10, cash flowing skills, your brain that prints money. Forget houses, stocks, or shiny businesses for a second. The most underrated yet top-ranked wealth-building asset, a skill that prints money on demand. I'm talking about sales, copywriting, coding, design, marketing, anything that turns into income right now. Why? Because skills compound faster than investments in the beginning. Think of it like this. If you drop a 20-year-old with no money but elite sales skills in any city, within a month he's eating steak. Drop the same 20-year-old with no skills but $5,000 in stocks. He's eating ramen and hoping for a 6% return. The rich know this. They rank skills as the ultimate cash flow faucet. Assets like stocks or real estate are sexy once you've got money, but until then, it's your ability to generate income that builds the foundation. For example, your buddy who learned to code during the pandemic now makes $150,000 and works remotely. Compare that to your cousin who bought Dogecoin because Elon tweeted, one stacking cash, the other stacking regrets. Basically, if you don't own a skill that makes people say, damn, I'd pay for that, you don't have an asset. You've got a liability. But skills are just the foundation. You can be the world's best copywriter, but if you're not turning that money into something that works while you sleep, you're stuck on the hamster wheel. So what's the next real wealth builder? Asset number 9, ownership of a business, even a small one. Want to know why most people never break free financially? They rent their time forever. Owning a business, even a small one, is like owning a money-making machine. And no, I don't mean you need the next Tesla. I mean small, quiet, cash flow businesses that keep paying you whether you show up or not. A laundromat, an online digital store, a faceless YouTube channel, yep, like this one, a landscaping company. The asset isn't just the revenue, it's the system. It's owning the machine, not working as a cog inside of one. Here's the kicker. Business ownership scales in a way jobs never will. Your boss gives you a 3% raise? Congrats. That's $1.25 extra an hour. Your business scales by 30%? That's freedom money. Like, ever meet the guy who owns 3 car washes in your town? He wears Costco jeans, drives a beat-up F-150, and somehow pays cash for a vacation home. That's the power of business ownership. Stealth wealth in its purest form. Bottom line, a business, no matter how boring, is an asset that outranks almost everything because it multiplies time and money at once. But here's the problem. Businesses can flop if you don't back them up with the right safety net. That's where the next asset steps in, and it's something you probably think of as boring old savings. Spoiler, it's way more powerful than you think. Asset number 8, boring cash reserves, aka sleep at night money. Yeah, I know what you're thinking. Cash? That doesn't build wealth. Inflation eats it alive, and you're not wrong, but you're not right either. Cash reserves aren't about getting rich, they're about not going broke. And here's a secret. Not going broke is the first rule of building wealth. Think of cash like oxygen. Nobody flexes oxygen, but you notice real quick when you don't have it. That's why rich people keep boring, liquid cash sitting in high-yield savings or money markets. Not for growth, but for opportunity. Because when the market dips, cash isn't lazy. Cash is king. Cash is how you buy assets at a discount while everyone else is panic selling their soul for rent money. Just think about it. During the 2020 crash, regular people were selling stocks to pay bills. The wealthy, they were buying Apple and Tesla at clearance prices with cash. Just understand this. Cash doesn't make you rich directly, but it keeps you in the game long enough to win. Without it, you're out at the first sign of trouble. By the way, when you finish watching this video, Go back and watch our Financial Freedom series to discover the strategies that literally make average people go from middle class to financially untouchable. As always, make sure to subscribe to the channel. But anyways, having cash just buys you peace of mind and a seat at the table. To actually start stacking, you need an asset that grows like a tree, feeding you year after year, and that brings us to asset number 7, dividend-paying stocks. Let's be honest, most people treat the stock market like a casino. Meme stocks, hype plays, YOLO my paycheck on options. But wealthy people, they play the stock market like landlords. Enter dividend-paying stocks. Companies that literally pay you just for owning them. Imagine this, you own shares in Coca-Cola. Every quarter while you're sipping your soda, they're sending you a cut of the profits. Doesn't sound flashy, but here's the magic. You reinvest those dividends, and suddenly you're compounding wealth like a snowball rolling downhill. This is why dividend stocks rank above plain old growth plays. Because with dividends, you're not just hoping the price goes up. You're actually collecting checks while you wait. I had a buddy who once bragged about doubling his money on Dogecoin. 6 months later, he lost it all. Meanwhile, Warren Buffett has been holding Coca-Cola since the 80s, sipping his cherry Coke while getting paid billions in dividends. One guy's broke, the other guy's Buffett. Dividend stocks are the bridge between cash flow and long-term growth. They won't make you rich overnight, but they will quietly fatten your bank account while you sleep. But here's the thing, dividends are slow and steady. To truly accelerate wealth, you need an asset that grows while multiplying your net worth through leverage. And no, I'm not talking about risky options. I'm talking about the wealth vehicle most millionaires credit for their fortune. Asset number 6, real estate, cash flow properties. Ah yes, the heavyweight champ. Real estate isn't just an asset. It's literally a cheat code. Why? Because it combines cash flow, appreciation, and leverage all in one. Let's break it down. Cash flow. Rent checks hitting your account every month. Appreciation. Property values tend to rise over decades. Leverage. You can control a $300,000 property with a $60,000 down payment. That's like buying a goose that not only lays golden eggs, but also gets fatter over time. And you only paid for one wing up front. And don't get it twisted. Real estate doesn't have to mean skyscrapers. It could be a duplex, an Airbnb, or even a small rental house in a boring neighborhood. In fact, boring is better. Riches are hiding in 3-bedroom rentals in the suburbs, not flashy condos in Miami. I mean, ever wonder why your landlord seems way too chill? It's because your rent is funding their Starbucks habit and their kids' college fund. Meanwhile, you're stressing about rent hikes while they're building equity with your money. Honestly, in my opinion, real estate ranks high because it multiplies wealth on 3 fronts at once. Done right, it's like putting your money on steroids legally. But let's be honest, real estate isn't for everyone. High upfront costs, management headaches, roofs that leak at 2 a.m. So what if you want the benefits of ownership without unclogging tenant toilets? Well, asset number 5 solves that problem in the slickest way possible. Asset number 5, REITs, real estate without the toilet drama. So you want real estate's juicy returns, but the thought of dealing with Karen's broken dishwasher makes you want to cry? Enter REITs, real estate investment trusts. Think of REITs as stock market real estate. You buy shares and boom, you own a slice of hundreds of properties, malls, apartments, data centers, even hospitals. Best part, they pay out juicy dividends by law. That means while some poor landlord is chasing rent checks, you're chilling with passive income. No tool belt required. It's like ordering Uber Eats instead of cooking. You still eat, but someone else sweats over the stove. Here's the perfect example. Simon Property Group is one of the largest REITs. While most people stressed during the retail apocalypse, investors in Simon were quietly collecting dividend checks off the back of shopping malls. REITs rank below direct real estate because you don't get the leverage advantage, but they're perfect for people who want real estate income without real estate headaches. But REITs still tie you to one sector, property. What if you want an asset that's liquid, flexible, and historically proven to outpace almost everything when held long-term? The next asset is so powerful, it's been creating millionaires for over 100 years. Asset number 4, broad market index funds, the lazy person's wealth machine. If individual stocks are like betting on your favorite NFL team, index funds are like owning the whole league. And spoiler, owning the league is safer than praying your team doesn't choke in the playoffs. Broad market index funds like the S&P 500 are the ultimate set-it-and-forget-it asset. You buy one fund, and boom, instant ownership in hundreds of the biggest companies on Earth. Apple, Amazon, Microsoft, they're all in there. And here's why wealthy people love them. Over time, markets go up. Not always today, not always this year, but zoom out 20 years, index funds are undefeated. Think of it this way. Imagine you're playing Mario Kart. Betting on one stock is like picking Yoshi and hoping he wins every race. An index fund is like owning every racer. No matter who wins, you still get the trophy. And the costs, dirt cheap. No greedy fund manager skimming half your returns. Just quiet, compounding growth. J.L. Collins, author of The Simple Path to Wealth, built his fortune almost entirely on index funds. Meanwhile, Wall Street bros in $5,000 suits are still trying and failing to beat the S&P. Index funds don't make headlines, but they make millionaires. Slowly, quietly, reliably. But here's the thing. Index funds and REITs still live inside the financial system. To really bulletproof your wealth, you need an asset that's been money for thousands of years, long before Wall Street even existed. This next one, it's literally shiny. Asset number 3, precious metals, gold and silver, the ancient flex. For thousands of years, people have flexed with gold. Kings wore it, pirates stole it, rappers put it on chains. But here's the truth. Gold and silver aren't about looking flashy. They're about surviving chaos. When markets crash, currencies inflate, and governments go broke, precious metals don't ask questions. They just sit there, holding value like the stubborn grandparent who refuses to sell their house no matter how many "we buy ugly houses" signs pop up. Now, let's be real. Gold won't make you rich by itself. It doesn't spit out dividends, it doesn't multiply like real estate, and it doesn't innovate like stocks. But as a hedge against disaster, it's priceless. Think of it as financial insurance. Not the star quarterback, but the reliable defense keeping you in the game. In Venezuela, when the currency collapsed, the people with gold and silver didn't just preserve wealth, they survived. Meanwhile, people holding cash saw their life savings turn into monopoly money overnight. Gold ranks lower because it won't grow your wealth, but it protects it when the world feels like it's falling apart. But let's be honest, gold just sits there. If you want real growth, you need something modern, something that's volatile, yes, but also filled with insane upside if you play it right. That brings us to the most controversial asset on this list. Asset number 2, cryptocurrency, the Wild West asset. Crypto. The word that instantly divides a room. Half the people think it's the future of money. The other half think it's digital monopoly tokens for basement gamblers. Here's the truth. Both sides are right. Yes, crypto is insanely volatile. One week, you're up 300%. The next week, you're explaining to your girlfriend why her vacation fund is gone. But here's why it ranks above gold. Potential upside. Bitcoin and Ethereum have proven staying power, and the technology behind them, blockchain, is shaping industries quietly in the background. For wealthy people, crypto isn't a gamble. It's a hedge. They don't throw their whole net worth in Dogecoin. They put 1 to 5% of their portfolio in Bitcoin or Ethereum, just in case this digital revolution really does take over. Just imagine you bought $1,000 worth of Bitcoin in 2012. Today, even after crashes, that's worth millions. Meanwhile, the same $1,000 in gold, maybe a nice Rolex. Big difference. But here's the danger. Crypto attracts get-rich-quick thinkers. And those people? They always get wrecked. The smart move is to treat crypto like hot sauce. A little adds flavor, too much burns your whole meal. But keep in mind, crypto is high risk, high reward. It won't guarantee wealth, but ignoring it completely might mean missing the financial train of the century. All right, we've talked skills, businesses, cash, real estate, stocks, even shiny metals and internet coins. But there's one final asset left. And it's the most overlooked, most underrated, yet the one that quietly powers all the others. Without it, none of the top 9 even matter. Ready for the number 1 asset that really builds wealth? Asset number 1, your network, relationships that print opportunities. Here's the secret sauce most people never rank as an asset, your network. Think about it. Every business deal, every job offer, every inside scoop on an opportunity, it usually comes from people, not spreadsheets. You can have all the cash and skills in the world, but if you're playing the wealth game alone, you're sprinting while the connected few are cruising in private jets. Your network is like having cheat codes for life. The right mentor can cut your learning curve in half. The right partner can double your business overnight. The right circle can normalize wealth-building habits you'd never even think about on your own. Ever notice how mediocre rich kids stay rich? It's not because they're financial geniuses, it's because Uncle Steve knows a guy who slides them into the perfect investment or job. The average person is Googling how to start investing while they're getting texts like, "Hey, you want to buy into this apartment complex before it goes public?" And it's not just rich kids. Look at entrepreneurs. Almost every great founder had a network behind them. Investors, advisors, or friends who opened doors. Even YouTubers, like the one you're watching now. Behind the scenes, collaborations and connections fuel growth. Your network multiplies every other asset: skills, cash, businesses, real estate. They all grow faster when you're connected to people who've already done it. To wrap it all up, real wealth isn't about chasing hype or flexing Gucci belts. It's about stacking assets that quietly build and protect your money over time. Here's the brutal truth. If you're broke right now, it's not because you're lazy. It's because you're stacking liabilities instead of assets. The good news? That changes today if you start building with this list. And hey, if this video gave you even one aha moment, drop the word assets in the comments so I know you're serious about wealth building. And because this video was about what assets actually matter, if you really want to win the money game, you need to know the 10 things you should never spend money on if you want to be wealthy. Trust me, most people get this wrong and stay broke forever. Click here for that video and I'll show you exactly what to avoid so you can accelerate building these assets without falling into traps. We'll see you in the next one.